Welcome to Yadnya Investment Academy. Today we are going to see what are ULIPs. Unit linked insurance plans or ULIPs are insurance products which provide risk cover to the policyholder along with options to invest into equity, debt or hybrid funds. In short, these are insurance plus investment kind of products sold by insurance companies. There are two terms involved here. Premium payment term is for how long you'll keep on paying your premiums. Another is policy term. That is for how long you'll have to stay invested plus your insurance will be valid. Premium payment terms that are available are single pay, fixed duration like for 5 years, 7 years or 10 years and regular pay that is throughout the policy term. Based upon your premium payment term, policy term ranges from 5 years to 30 years. The premium payment mode or the frequency of premium payments that are available are single, yearly, half yearly, quarterly or monthly. Sum assured is a term you would come across in case of ULIPs, which is nothing but an agreement between the insurer and the insured that in case of unfortunate death of the insured, this is the minimum amount that the insurer will pay. In case of single premium, it is minimum of 1.25 times of the premium that you've paid. For maximum sum assured in case of single premiums, there will be a certain age specified in ULIPs. It could be 39, 45. Below that age, you'll get 10 times of the premium that you've paid, and above that age, it would be maximum of 1.25 times of your premium. In case of fixed or regular pay, a multiple of your annual premium will be paid based upon your age. Another term you'll come across is death benefit, which is sum assured minus any withdrawals if you've made, or minimum death benefit. It depends upon the ULIP plan. It could be 101%, 105%, likewise. Or the fund value, whichever is higher of these three would be paid out as death benefit. Another term is maturity benefit. If the insured survives the entire policy term, on maturity he would get the fund value. He could draw this fund value as a lump sum or in a structured manner for the duration specified in the plan. This term could be 1 to 5 years, 2 to 5 years as per the plan. ULIPs have a lock-in period of 5 years. If you surrender your plan in the first year itself, the surrender charges could be as high as 6%, which is a percentage of your annual premium or your fund value. Or it could be a maximum of 6,000 rupees. So whichever of these two is lower would be charged. The surrender charges go on reducing till the fourth year, which is 2% or 2,000 rupees, whichever of the two is lower. From the fifth year onwards, there are no surrender charges. If you surrender your plan in the lock-in period of 5 years, you cannot withdraw your money. Whatever is your fund value minus the surrender charges is moved to a discontinued policy fund where it earns an interest of about 4%. Only after completion of the lock-in period, you can withdraw your money. ULIPs provide a balancing option. With your various life stages and changing risk-taking capacity, you can change the ratio of investments into various funds. In your early life, you could opt for more of equity exposure, and with your increasing age, you can increase the ratio of debt investments. But bear in mind, it has to be a proactive step to balance your portfolio. Let's talk about the charges and clarity of investment in case of ULIPs. There are a lot of charges involved in case of ULIPs. First is the premium allocation charge, which is charged as a percentage of your premium and is taken upfront. Then there is policy administration charge, which is charged like a flat rate or a percentage. Then there are mortality charges, which depend upon your age, your health, and are deducted by deducting your allocated units. There's fund management fee, which is a part of the NAV. Then there are surrender charges applicable in the lock-in period that we discussed in detail. Then there is service tax that is applicable, which is deducted before allocation of units. There could be some extra charges as well. There's a great variation in how these charges are applied by all these plans available with various insurance companies. So arriving at a standard percentage which would indicate the overall charges is impossible. All these charges make it very unclear of the actual amount being invested each year. The charges that we just discussed are low in case of single pay plans. It is advisable to keep insurance as well as investment separate. But what drives a lot of people towards ULIP is that it serves like a one-stop shop for insurance as well as investment. They think that insurance in case of ULIPs comes cheap, but insurance in case of ULIPs does not come cheap. For example, if you need a 1 crore cover, you would need a ULIP of 5 lakh rupees per year. But in the same place, if you go for a term plan, you would get the same cover for just 10,000 rupees. There is no maximum limit of investment into ULIPs, but out of that, only 1.5 lakh rupees would be tax exempted under the overall limit of the Section 80C each year. The invested amount, returns and the maturity amount are completely tax-free if the sum assured is more than 10 times of your annual premium. But if the sum assured is less than 10 times of your annual premium, the maturity amount is added to your gross income and taxed according to your tax slab. If the annual premium is more than 1 lakh rupees, a TDS of 2% is levied. If you surrender your plan in the lock-in period, the tax exemption availed would be reversed and you would have to pay taxes accordingly. It is difficult to mention the average returns in ULIPs as each insurance company has many plans with many different options. But mostly, their returns in the last 5 years, as of July 2016, have been between 5 to 12% on an annual basis. Today we discussed ULIPs as a product in great detail. We talked about the lock-in period, surrender charges, balancing option that it provides, charges and clarity of investment, tax treatment and returns provided by ULIPs. Hope the video has given you a fair idea about ULIPs. Friends, thanks for watching the video. Watch this space for more such topics. Until then, happy investing. If you have any questions, let us know in the comment section below our videos. And if you like our videos, please do subscribe. Thank you.